Sometimes the Williams percent R would give me the oversold condition I was looking for, but the stochastic wouldn't. But it would start running off, and I'm like, what the hell just happened here? Like, it shouldn't have done that. It's supposed to listen to this indicator, for fuck's sake. Why is this doing that? I wasted years doing them, arguing why the market wasn't listening to this indicator. And that's what people do when they get in these indicators. They get pissed off, and you see them on their YouTubers, they're live streaming. Just watch them, read their face. They're disgusted. Oh, man, that's the trade that they got in. They didn't tell you about. Okay, that's it. That's the one that's burning them. Okay, but then they'll say, "Oh yeah, I took a trade here. I got long here." You didn't say you got it long then. You didn't do that. You did not do that. Okay, so there's a difference. I'm calling shit beforehand. I'm telling you where it's going to go. So don't be comparing me apples and orange bullshit. Okay, but you're going to get wrapped up in all this indicator pursuit and waste so much time doing that. When I first teach students under my wing, the first thing you're doing is take everything off your charts. Take everything off your charts. Completely naked, open, high, low, close, or candlestick. That's it. Then you're going to study price in relationship to time. When do intraday moves occur? When do intra-week moves occur? Is there an influence that you can set a clock to, which is the economic calendar? All of that built into what you anticipate is going to happen on that weekly chart. Is the weekly chart most likely going to expand higher, or is it more likely to expand lower? That right there sets the tone for what you want to focus on going forward in the new week. Do you think that the market is really close to a target that you've been watching? If that's the case, that it might go up and expand to a premium level or a higher time frame resistance point, okay, something like that for folks that are brand new, don't know my terminology. Then you would anticipate some measure of potential intra-week reversal. But sticking with the narrative that it's not advised to try to pick tops. I don't try to pick tops, but it allows me to formulate a game plan that if I'm bullish, for instance, we were bullish on NASDAQ, and I took your attention to a very specific gap on the weekly chart. And hopefully I've dispelled all the confusion, because invariably people in my comment section, you can't see the comments in the new videos, but it's still a sugar coma. You know, it's all love basically. But the few people that are questioning, they're saying like, you know, why am I using the June contract and not the continuous contract? If you're looking for volume imbalances, you need to be using the contract month. Okay, that's a characteristic for that specific PDA rate, which is the reason why I get pissed off when people try to pretend they understand and go out and try to make courses with it. You don't know what the fuck you're doing, so stop. The continuous contract is too smooth, and it's not going to offer the opportunity to show the inefficiencies that exist in thinly traded contract months. And what do I mean by that? Well, right now we're trading the June contract of E-mini S&P. In a couple weeks, it will roll over, and as traders, we will roll over and start following the September contract. The whole time, December is being traded too. Thinly traded, but it's being traded. The inefficiencies in price action on those months in the future delivery, while we're trading the front month right now for ES is the June contract. The next month out is September. So you would be having a study of ESU. U is the symbol for contract delivery month, September, and then 2023 on TradingView. For December, it would be ESZ as in zipper 2023. And that would be your symbol for December contract for S&P. They're not going to mark to market perfectly the same. They're not. And when they first start becoming available and traded, there's going to be this really gappy, inefficient price delivery. When you blend that with the present day narrative, which is essential in understanding where price is going to go, and that's what I teach, and that's something that needs to be mentored. I can't write a book, okay, and tell you in a paragraph or a chapter, this is the be all end all. This is how you do it. There's so many supporting things that you have to learn, which is the reason why this is expensive. It takes a lot of time to learn this, not just by me. Anyone that goes into this industry and wants to learn how to trade and they think they can do this shit learn how to be consistent in a couple months or a 1 week workshop. I have so many people reach out to me, hey, can we do a workshop? We'll fund it. We'll put the whole thing together. It'll be a 60-40 split. I get 60, they get 40. And all I got to do is teach. They do all the venue management. All I got to do is be there at the time and do it. Everything, all that shit, marketing, all that shit's done. That is them. I'm not interested, folks. Like, if I want to make more money, all I got to do is put a price tag on something. There it is. It's done. I don't want to do that anymore. I don't want to do it. Okay. But if you understand that if you're taking our short-term expectation on price, placing that in the context of what higher time frame price action is doing, all the things that you're wrestling with right now, it diminishes. Not entirely, but it diminishes greatly because you're looking for higher time frame perspective to unfold. That's a macro perspective, not macro in a sense of like the short little algorithmic things I'm talking about. Macro perspective and micro perspective. Macro would be weekly, monthly. Intermediate term would be daily, 4 hour. And then short term is 1 hour or less. And then obviously micro is we're in the 5 minutes and less. So there's an hierarchy in price delivery. And what you might see in one time frame as bullish may just be a future retracement into a longer term sell model. In 1995, I had my ass handed to me on Swiss franc. I was looking at a weekly chart and I was expecting this to be some kind of like a bull flag. And this is how the fake bull flags became a thing. I was trying to go long in Swiss franc. Actually told some of my friends, look, I'm going long in Swiss franc. This is what's going to do. I think it's going to go up this much. And what I did not understand is that it was simply going up into a small inefficiency that I understand and teach you now. And it was going to go lower and a lot lower. And that was one trade that I wrestled. I was convinced it was going to move for me, and I kept opening up my stop, kept opening up my stop, kept opening up my friends, they got stopped out. I was holding on to it because why? Why did Michael, rookie sensation ICT, why did he think that it was a smart move to keep opening the stop? That means I was widening. Okay, wherever I had my initial stop loss, protect the initial entry long, I was like, okay, I know I'm right, but I'm probably wrong where I'm placing my stop. So I have to just sit through a little bit more. Open it up more and more, a little bit more, open it more. And I was like, okay, now this thing's looking like it really wants to go down to go right to my stop. I'm going to just take the stop off. Well, that's when it fucking tanked. Okay. And I experienced $6,000 per contract. That's not fun. That's not fucking fun. Okay. Especially when you're not in front of the chart seeing it. It's just changing numbers. Okay. It's changing numbers on the screen. So I was like, okay, this is bullshit. This is painful. Well, that lesson, that pain, that uncomfortable state would have taken many of you out of this and say, I'm never doing it again. Was I embarrassed because my friends saw me lose big? Absolutely. I was fucking totally demoralized. But I turned it around. I said, okay, that's never going to happen again. I knew I was wrong, but I arm wrestled it. I knew I was fucking wrong. I was under the pressure of the market's thumb, and it was giving me all the time in the world to save my own neck, and I wouldn't listen. I came in with my preconceived notions that this is what the market's going to do. I married the vein. I sold my soul to that trade. I was not going to let go of it. And it punished me. It tore my ass up. And that's that gapping feature that I tell you about that I was afraid of. That's where I learned that lesson from, because the Swiss franc just kept going lower. And then in the next session, I'm holding over. It just gaps further against me. I'm like, what the fuck? Clearly, it's got to be done now. Nope. 4 days later, I'm still in there. No stop. No stop. And account gone. So back to saving money, working on the weekend, delivering pizza, getting some scratch capital raised up again, and I had to go back in and do it all over again. And the only lesson I learned from that at the time was don't hold overnight on futures and currencies because the gaps are too much. That was the only lesson at the time that I learned. But now, knowing back what I know now, there's so many things that I understand about price action that I would never have gone long now. As the trader I am right now, and it's not because I'm hindsight 2020 and everybody could be saying the same thing. I know things that I was falling victim to and I was not paying attention to it because I was unaware. I was unaware. My understanding of commitment traders was not what it is today. Just simply because the commitment traders were showing long positions by the commercials. That was weeks before. Weeks before. They had switched to being bearish, net short position. That means if you're looking at commercial traders on a net trader position chart, they had more contracts net short than they were net long. So that means that they were shorting where I was buying. And I was that retail Rick that got his ass handed to him. And I learned years later to look back at that and say, oh, shit. This is one of those millionaire mega trades. And I didn't even see it or recognize it. So understand, this is the guy that you're learning from. Okay. This is the guy that has more understanding today that in the beginning, at that time, I didn't know what the hell I was doing. I was learning all this stuff right then and there. I was learning it. You're having that same right now, that experience right now, but I'm giving you insight that isn't taught anywhere else until they learned it from me. But you can't get it watered down. You have to understand there's a lot more detail to all the things I'm teaching. And just because you're introduced to the idea, don't fall victim to thinking you're ready and go out there and risk money because you're going to hurt yourself. And that small little hurt, that small little loss incurred, and all losses suck. They do. They absolutely suck. But in the beginning, every loss isn't a paper cut. It's like having your arm cut off. You're losing an appendage. You make it like that. You increase it to that level of influence, impact, when it's nowhere near the degree that you really think it is when you have experience. Look back and say, oh shit, that was nothing. You're gonna have a whole lot of paper cuts. Sometimes a little bit of gash here, gash there, put a stitch in it, staple it, shut the fuck up and keep going. Do the same thing you've been doing because you just did one small mistake. It doesn't change the model. It doesn't make the model inefficient. It doesn't make it ineffective. It just means that you messed up as the operator. Own it, move on. Don't dwell on it, move on. But if you have flawed logic right from Jump Street, you're going to lose your ass. And you're going to be miserable at the end of it because you're going to remember all the times that you subconsciously knew that you should not have been doing what you're doing, but you didn't listen. You couldn't bring the amount of strength and discipline that's required to simply say, I'm getting out of this. This is wrong. I'll worry about making the money back at a later time. But right now, I got to stop the bleeding because that's the first rule you got to do. Learn how to stop yourself from losing your ass. You're going to lose money, folks. That's a guarantee. You're going to lose money. Every trader loses. They do. I have learned where I lose the most, and I try not to trade in those instances. In April, I took road trips. I said, fuck this. I'm not doing this. I'm not going to get out here and call something that I know the probabilities are so low for me to be accurate. Why? Why feed the trolls? I'm not going to do that. I'm going to practice what I preach. If I don't see some reason for me to be in front of the charts, I'm getting the fuck out of Dodge. See ya. I'm out of here. I had a lot of fun, relaxing, spent my time with my family. It was great. And then I got back home when I felt things were changing. You were told in advance where we were expecting the NASDAQ. You were told where we were expecting the euro, the dollar. They behaved exactly as I outlined them. You can't change that. You can't discount it. You can't say it wasn't real. It's not hindsight and it's not cherry picked. It's 100% understanding. And to answer some of the folks that were crowing to me, Can you teach swing trading? Can you talk about higher time frames? I don't want to look at a 1 minute chart. It's just, I'm never going to trade a 1 minute chart. Okay, that's you. But that same idea of understanding what price does and how it delivers, what makes price book the way it does. You can study hundreds of examples over the course of a few months in 1 minute data. And that same logic being applied to a daily or weekly or monthly chart, it's still the same thing. It doesn't feel like that could be true, but it's exactly what it is. Because price, here's the major discovery that I had that was a major epiphany. I thought that the market was independently doing things, you know, randomly all the time. When it's not. It's not doing that at all. It's working from higher time frame charts down to lower time frame charts. It's trading to where liquidity is resting, obvious below old low, below old equal lows, or above old high, or above relative equal highs. That's liquidity. Okay. If you have already ran that liquidity, and you, for instance, let's make the argument that you're bearish. Okay. You're bearish on a market and you want to get short, and you go into price data. Look at a weekly chart. It supports the idea that you think it's going to go lower. Daily chart looks like it wants to go lower. You can clearly see where it would likely draw down to some old low or relative equal low. You want to look and see, has it gone into buy side recently on a daily chart, a weekly chart, or 4-hour chart? If it has, and it's sharply moved away and started going lower, you are in right now a sell model. That means it's already started its movement. So someone that we're going to deem as smart money, someone's short. Their interest in this is for it to go to an opposing pool of liquidity, which is what? Sell side. So your first objective is to look for low-hanging fruit. You want to go to you want to go to a 60-minute chart, find some relative equal low or single low that has not been traded to recently. There are sell stops resting below that. That's this market 101. You don't need to read books to know that. It's simple logic. If it moved up from there, chances are someone's holding a long position and their stop loss is right below that low. So the market's going to gravitate to that. If there's a large fair value gap, some kind of a buy side imbalance, sell side inefficiency that's below that, then you can view that as I'm taking a partial at that short-term 60-minute low, and I'm going to try to get into the high of that buy side imbalance, sell side inefficiency, the highest point, which would be like an institutional order for entry drill. If you were long or bullish, we're not doing that here. The example would be making the argument that we're looking for lower prices. You would look at the highest point of that buy side imbalance, sell side inefficiency, and then the equilibrium price point. That's how I would treat it. And then I would wait to see, does it want to move lower? I would use the consequent encroachment of that BISI to trade short if it was supporting the idea it wants to move lower. I would not be trying to trade the full closure of that buy side imbalance, sell side inefficiency. That separates me from the people that think they understand that, oh, it's going to go there because gaps have to be filled. They don't have to do anything. Those gaps can stay there for a long time. And they can stay there longer than your fucking equity can stay in your account trying to trade to get that gap filled. So there's rules to this. Okay. There's levels that are understanding, and engagement has to be defined, and you have to be disciplined. Like, you have to know what you're looking for. And it has to be in writing. Like, before I do a trade, I have an expectation of where I want to see it go to. It's written down. Same thing I'm having right now. I have a small little notepad, and these are levels I'm looking for. It won't mean anything to you. I know some of you are like, can you show me it? When you do that, it's literally just me writing down a price. That's it. In my mind, I know why I wrote it. If someone picked it up on the street and said, oh, this is ICT's secret instructions, it's not. It's just, these are areas I believe that the market's going to draw to. In my head, I have the narrative in mind as to why it would do that. I don't have time, dude. I'm trading on a 1 minute chart, sometimes less than that. How long does it take you to write down? I believe that 4111 and a half is sell side liquidity, and fuck that. If the market's already gone, it's left. It's already left the station. Elvis has left the fucking building. It's gone. You can't do that kind of stuff if you're day trading. You can't journal as you go. You journal after the fact. But when you're studying and tape reading, You just mark down what you think is likely to draw to, and you do that on your chart. Like you do that on your charts. That way it's there. And then you study what you have seen. Did it really do that? How did it behave when it did it? How long did it take to do it? Did it go there and just fall short of it in reverse? All these things are worthwhile studies. But some of the best seasonal tendencies are the ones that fail. I mentioned that in core content when I talked about seasonal tendencies. And that was an observation I really found on my own. I'm not trying to take credit for it or try to make a big deal out or be dogmatic about it, but when I expected certain seasonal tendencies to behave a certain way in certain markets, when they failed on me, they did it in stunning fashion. Like it was really something to be doing the opposite of. And that was a major help to me when I would lose money trying to go long with what I believed were seasonal tendencies. When I got my ass handed to me, I grew to trust the fact that I can be a short seller because of that pain. When I was taking a loss in a series of losing trades, trying to force my will on a seasonal tendency that I thought, like, don't look at these seasonal tendencies as a panacea. They're not be all end alls. They're not going to be cast in, stone where it always works. They don't always work. And while I wanted to see the indices present that opportunity, when I was going through social media, everybody was expecting it to go lower. Even the news was talking about, oh, stock market's going to go down, the stock market's going to do this and stuff. No, I'm aware that the debt ceiling was an issue. I was aware of all that stuff. We talked about it. But the technicals, the price action was showing us that it wasn't willing to do so. It had unfinished business on the upside. So because of that, we've been maintaining our focus on going long. And for the folks that don't pay attention, you see them. They're the same individuals that tweet like, but what about the seasonal tendency though? I thought we were supposed to go lower though. Okay. There's a there's a measure of common sense that you're going to have to use when you're learning this, especially with me, because I don't have patience for stupidity. If you are not paying attention to the fact that I'm looking at these markets and calling higher prices, I'm pointing your attention to this particular level. I'm looking right there. If it does this, it comes down and treats this fair value gap as an inversion fair value gap. I think it's going to go up to this buy side liquidity. It's going to go up to this premium volume imbalance. Does that sound bearish to you? If it does, you missed the plot. Go back and start from square one, because I wasn't trying to get you in shorts. I was taking your attention, pointing to those weekly imbalances. Why? Because that's the macro perspective. That macro perspective sets the tone for the market is willing to do the opposite of what I wanted to see. Well, I wanted to see the seasonal tendency. I wanted it to materialize, but because it was stagnant, it was just chopping around. In April, while I was down there sitting on the beach, I'm thinking to myself, you know what? It would be just like them to not send it lower. So where would I want to look for if price wants to go up? I need to take a look at that weekly chart again. And then that's what I shared with y'all. None of my tweets get deleted. They never get deleted. I don't edit them when I mess up and fuck up something or I misspell something. It is the way it is. Okay. Go back and listen to the Twitter spaces. Okay. People take them and they put them on their YouTube videos or channel and they monetize them. I don't give a shit. Make money on it. I don't care. Don't take my videos. And folks, Travis 4X, I'm letting you know your channel is about to get the fuck pulled down on YouTube. I did not give you permission to translate my shit into Spanish. You cannot take my fucking videos and translate them. Okay. I don't give permission to none of that shit. So your whole fucking channel is coming down. It's done. So when I took you through those mindsets of looking for seasonal tendencies, I was not forcing my will, which is what I would have done as a 20-year-old. As a 20-year-old, I would have been like, yeah, it's season time's gonna work. I'm gonna do it. And I would have went into what the media and the news have been saying. Oh, the debt ceiling's not gonna be raised, or we're gonna default. Personally, I'm gonna be honest with you. I wish we would fucking default. Because that's what it needs. This whole system, okay, just needs a fucking enema. It needs an enema. It's the stock market should not be where it's at right now. Okay, it absolutely should not be here. It is. It's not sustainable. But you can't look at that from common sense perspective and apply it to charts. You got to look at who can we hurt the most. And since the public wanted to sell short, one of the ladies that follow me, she's one of my students. She's like, "Is it time for the seasonal tendency to come in with lower prices now?" I said, "No, I think we need some more altitude first." And we climbed. And then when I told you that they created an immediate rebalance on the daily chart, that really is like a supercharging to it's going to really ram up their ass. And look what they did, where we opened up on Sunday. Huge, big exhaustive gap. NASDAQ went way up into that real liquidity void, that gap within that weekly chart's volume imbalance, that little sweet spot. And the whole time Dow has been sleeping. It's just, I got better things to do. I'm catnapping. I'm not interested in that. S&P has moved up, but you were told that NASDAQ was the strong one. Well, ICT, if that was the case, why was you trading NASDAQ? Because I'm taking you into one market, and that way you're going to specialize in one, whether you like it or not. You're going to eventually gravitate to one or two markets. You're probably telling me right now, bullshit, watch this. I'm going to trade 28 pairs. I'm going to be the ghost in the Forex. You're going to get your ass ghosted. You got to narrow your focus, folks. It's not a disadvantage to do that. It's advantageous for you to do it. Your attention cannot be diluted, especially if you're going to trade the way I'm teaching, because your attention needs to be 100% adhered to one instrument or a very closely correlated instrument. Because if you look at multiple things, and a lot of you are like, hey, can you talk about gold? Can you talk about crude oil? Can you talk about Bitcoin? Can you talk about this? And that? I mean, I don't have the attention span to be able to do all those things. I can't. Like my mind is racing 1,000 miles an hour, and there's so many thoughts that's trying to get in front, and so many things I want to say to you, so many things I want to teach to you, and things I want to do. And I'm wrestling with that. So if I have more markets to talk about, I won't be effective as a teacher. That's how it was when I was doing mentorship. Everybody wanted to add more to, can you talk about this pair? Can you just fucking listen to what I'm talking about in this one? Because what I'm teaching you in this one works in all of them. It works in all of them. So just slow your roll your sleeves up and say, okay, he's giving me what works. I'm not getting the flavor that I want, but it still will fill my belly. And I'll learn how to do this on my own market of choice after I learn how to do it, what he's teaching. That's the proper mindset with me. It's not have your way mentorship here. Okay, we're not doing to let's take requests. That's not how this works. Okay, to be effective, I have to do what it is that I know and not be distracted by it, because I'm easily distracted. I'm very easily distracted, and maybe some of you have experienced that. Trying to learn this, it's easy for you to want to be doing something else. And that's why I facetiously say sometimes, put down the game controller, put down the bonbons, put down the potato chips. I need you to really pay attention to what I'm about to say, because if you don't listen and adhere to yourself as a trader or a developing student, you're going to be hurt by it later on, and it's avoidable. So in that time period of being away and taking the road trips and such, I thought to myself, you know what? If I really wanted to fuck people over, I would go after this idea of sell in May and go away. And I would really flood the market with uncertainty. The debt ceiling's not getting raised. We're going to default. Oh man, the stock market's going to get decimated. Every doom and gloom prepper trader fucking channel out there was telling everybody the stocks were going to crash. Nope, they didn't crash, did they? They rammed right up into a level I told you they were going to go to. So what made that price action going higher energetic like that? The fact that it was opposing the expected result. The expected result would be stocks should go lower, and sell in May and go away. Now, that's not to say that we can't sell off right here or tomorrow, and that begins the whole typical May seasonality. It's just, it wasn't in the cards technically to go lower. And I'm not trying to pick the top, but I'm satisfied with where the NASDAQ is. So when I say things like that, immediately the infants in learning how to do this will come up and say, and I say that not to be mean, but you're an infant when you want to go, okay, now what? Look at the guys and the gals in the comment section or replies to my tweet and such. And I see it all the time in my comment section. The same 5 or 6 people. Okay, now what? Now what's going to happen? Now what's going to happen? Like, dude, what the fuck? It just moved over 1,000 points. Over 1,000 fucking points that not one YouTuber talked about. Not one of them. And I guarantee you, secretly, some of them have been fading me, hoping they can come back and say, he said it was going to do this, blah, blah. And guess what? You got your ass hurt, didn't it? Your ass is stretched out now. I'm trying to help all of you, but I'm teaching you practically based on what we're seeing in the chart real time. Where is it going to go next? I could do that all day long in 1-minute charts, all day long, all day long. Every major fluctuation intraday, I can be a part of that, up and down. I get losses from that. I will incur losing trades by doing that, but I can play that all day long, making $19,000, $20,000 over the whole week using multiple contract or accounts of demo. You know, I can do that $19,000 in fucking one session. I don't need your bullshit. Okay. So when you look at these other folks out there, they're going to try to distract you from learning this because this is going to help you and it's going to minimize what they're doing. Their strengths are going to be reduced by your ability to do this without any indicator, no crutch. Not one fucking thing needs to be applied to your chart except for your own notes and annotations. And that flies in the face of the majority of everybody on YouTube. More people's going to join the hate wagon, okay? They're going to, because they think that's going to be a way for them to overcome this monster, this Frankenstein ICT is. I'm just an average dude, man. That's it. I'm trying to help all of you. I'm not victimizing any of you. I'm not going after your YouTube channel. I'm trying to talk shit about anybody. And when you do that kind of stuff, it makes you the wrong kind of influence. Like our community here, everybody that sells a service, they'll say our community sucks. Well, they say that because they call bullshit when they see it from their YouTube channel. And they say that price is being bought up and buying pressure sends price higher. When you know differently now. But they don't like that because it goes against their narrative. Their selling points are those things, those features that appear in books. So it goes without saying, of course, they're going to say our community's toxic because we're calling them bullshit. They're not doing the right things with the markets. Even if they're making money, they're attributing their happenstance being right. And I've had lots of that in the beginning. And these folks are 20 years old. They're fresh out of high school, most of them. And they're teaching. What the fuck are you teaching? What not to do. That's what they're teaching. Don't do those things. I'm still here. I'm just looking. It's what the hell is that? That's got to be a drone. Hang on. I'm not sure if I can do this while I'm talking to you. Let me try. Oh yeah, it's definitely a drone. Somebody's flying a drone. The I was like, oh shit, I got me a UFO. Tinfoil hat, what came out of nowhere. That shit can happen anytime. But anyway, the this this journey of yours, okay? This journey that you're going through, you're gonna have peaks of mountains that you're gonna reach the top of, and you're gonna feel like you've conquered everything. And then you're gonna keep going forward. Well, if you're at the top of the mountain, what's gonna happen? You're gonna have to go down. Keep going forward, well, that means you're going down. But you're gonna view that going down period as the end of your career. And you start pushing too hard on your trades and forcing things that aren't in the chart. So what I did was I used the information that I gleaned from pain, blown accounts, real psychological warfare that I put myself through. No troll can say anything to me that would be more painful than I've already done to myself in my career as a 20-year-old. Nobody could do anything to me. Nobody can do anything, say anything about me to make me fucking lose sleep. I don't give a shit. Okay. But you, as a new student, whether you're learning from me or anybody else, You're highly influenced. It's so easy to manipulate, and you're malleable. Like you can be manipulated to the point where bad news about anything that you're trying to do will convince you quickly, and you'll use that as a perfect excuse to say, okay, it's too much effort. Yeah, it's definitely a fraud. It's definitely a scam. It's this stuff doesn't work. It doesn't work when it does. You just simply haven't put the time in doing the right things. Okay, there's people out there that spent a lot of time doing stupid shit, watching videos only. You got to be in this, looking at the price action, studying it, going through the process of measuring how much drawdown the trades occur. How often does these fair value gaps form? I've literally removed all of the fucking guesswork and reduced it down to a 60-minute time window. Okay. 60-minute time window, gave it a cool ass name, the silver bullet, because that's what you're looking for, a fucking silver bullet that never misses. Okay. If you understand narrative and you know where the next draw on liquidity is, you have a 90% likelihood of making fucking money if you know how to trade and use that model. There's nobody else out there can say that shit because their indicators, they don't know when their indicators are going to change and say it's overbought, oversold, or it's a divergence. They don't know. They're a victim of that shit. They're waiting for that train wreck to happen. They're waiting for it. I am telling you where this shit's going to explode. I'm telling you where it's going to go to. I'm telling you what time it's going to form. What guessing game do you need to make now? What guessing game? Between 10 o'clock and 11 o'clock, every fucking day, there is a gap that can be found from a 5-minute. If it's not on a 5-minute, where do you look? Okay, drop down to a 4-minute. Oh, I don't see a gap there yet. Let me drop down to what? 3-minute. You learned that in a 2022 model. Some of you are pretending like you never even watched that stuff. You didn't figure that out yet. You have to go down. You're doing a top-down analysis on intraday chart, on micro market analysis. 5-minute. That's your high time frame on intraday. When you're in the little time frames, 5 minutes is like a fucking weekly chart on a 15-second chart. But I don't want to trade that way. Then don't fucking trade that way. But use the information on the higher time frames. You guys bellyache, the people that do bellyache, you're bellyaching about things that I've already addressed. If you just simply watched the videos and kept good notes, I've already talked about those things. But you're fucking lazy. You want me to take you to the video at the minute marker and save you all the time and effort of going through it properly. And you learn more going through it the normal way. You think that one thing you're wrestling right now is going to be the thing that makes it better for you to start making money. That's not how it works. Because when you learn something new, 20 more fucking questions pop up. You know what that's called? That's fucking progress. Okay? That's progress. And you're afraid of it because you're stepping into the unknown. You're stepping into a field that is extremely technical. And all the results are contributed to your decision making, your execution, your pushing of the button, your not or placing of a stop loss, the amount of leverage that you're applying to that trade. That's all your fucking fault. It's yours. You need to own it. I'd never sugarcoat that stuff. And the people that bellyache the most are the ones that are doing all the wrong things. And they're thinking that there's something new I'm going to teach that fixes that. When it's you. You are. It was me when I was younger. I did all that same stupid shit. I was the reason why I was blowing those accounts. It wasn't the market. It was me. I knew what I was doing most of the time was wrong right before it would stop me out. And I still wouldn't get out because I was arm wrestling it. Well, I had a perfect opportunity, a perfect stage set for me right now, just recently in the last 6 weeks or so. I introduced what I would like to see the seasonal tendency pan out. I said that. I said it in Twitter Spaces. I said it in a YouTube video. I audibly made myself and talked about it in tweets. But if the market in itself is showing us it's not going to do that, I'm not that same 20-year-old neophyte. I'm not the guy that's wrestling with his emotions about being right. I don't need to be fucking right. It's actually better. It's better when I'm not right. I can teach you when I'm messing it up. I'm a human being. If I make a mistake, how are you going to deal with that? How does ICT deal with it when he does it wrong? Look at what I did on Friday. Like 11,000 something, whatever it is, in terms of trading up and down, up and down. And I forced myself to take shorts that I know that could potentially pay out But the bias was what? Reaching that weekly volume imbalance. I even type it out. This is not a short. You're all going to see it. So I'm communicating that, yes, there's a short there, but it's not the short that I would really want. I want to be long. And I showed you the history, every little trade, every little thing that went through. And I think it was like $975 losing trade there. But on the grand scheme of things, it's nothing on that day. You wouldn't even feel that. If every one of those trades were made by you, would you be worried about that $975 that it would have been a loss? For some of you, it's like the end of the fucking world. It's the rock in your shoe. You can't go any further. I can't do this anymore. It hurts too much. You're not ready. So how do you fix that? Go back into back testing. For the guy that sent me a tweet this morning, it said, what do I do if I'm able to see the draw on liquidity? Well, first of all, you got to understand, are you able to do that, or are you using mine? Because if I'm calling the market direction and you're falsely attributing it that you can do that, because many times students come to me in the early stages, they think I'm ready because I'm lending you my experience. I'm giving you my 30 years of experience reading these markets. That way you can decide on where you think the market's going to go. You can ignore me. You can fade me at your peril, but I'm telling you where I believe the market's going to go next. And look at it. We've been doing it for a couple of years now publicly. And you decide, is it accurate? Is it accurate or not? If it is, that's what keeps you here. That's what keeps the community growing. Because if I didn't know what the fuck I was doing, I would be canceled already. Be like, this guy don't know what the fuck he's talking about. You see it. You see the evidence of it. But are you really able to see the next draw on liquidity? If you are, what model are you using? What's the multiplier you're using? What PD array are you using to get into a trade? Is it always changing? As a mentor, I discovered that many of my students want to force a specific PD array. And it's usually in the beginning, it's the order block. The least taught thing that I've done, that's the thing that they want. Because everybody doesn't know what the fuck they're doing with it. And I've already said this, that will not be released until it's in a book, because it's been already been abused poorly, from other people. You don't know what an order block is, okay? It has nothing to do with level 2 data. It has nothing to do with the size of orders resting in the market. It has nothing to do with that. It's a change in the state of delivery where the market turns from a buy model to a sell model, from a sell model to a buy model. I have not taught that to anybody. My charter members don't know that. They did not learn that, okay? They have been introduced to an idea. If they were all in a room right now and I said, okay, raise your hand as a private mentorship student, you're all charter members, raise your hand if I taught that. Nobody would raise their hand up. Raise your hand if I said you've just been introduced to it. There's more lectures coming on that. They would all raise their hand. So stop believing these fucking people trying to sell you shit. I got the secrets from ICT's forum. He taught this. He taught Enigma. I am never teaching fucking Enigma. It's not going to be taught to anybody outside my fucking family. My children are going to decide whether or not it ever gets taught. Maybe one of them will sell out their soul and make it a book or make it a course or whatever. I don't give a fuck. It's their decision. I'm not doing it. I'm not doing it. I'm on a really long rabbit trail. I got to check my notes here, make sure I'm on the right path. So, yeah, we talked about that and talked about the model. And the content that I've already released, I hope you guys can appreciate me just talking to you like, we've known each other for a long time. Because this is how I would talk to you if you were right next to me. If you were doing one-on-one with me, this is how I would talk to you. I wouldn't sugarcoat anything. I would be honest. I would tell you where I made mistakes. I would tell you what I learned from those mistakes. And I wouldn't hide from it. Because that's where the real learning occurs. But so many of you are perpetual ICT students and you don't realize it. And I understand that you like what I do and you like how I do it, and it's great concepts, but don't lose sight of why you are learning. You're all waiting for the next thing to be taught. Just like the folks that always say, when it delivers to where I think it's going to go, and the market goes to whatever level I've outlined publicly, and it does that, they're the first 4 or 5 people that show up in my comment section or reply to a tweet and say, okay, what's next? Now, here's one of it's either one or the other. It's somebody that's waiting for me to get it wrong, and they're going to champion that all over the internet. He said it was going to do this and it did that. Okay. Or they're just somebody that wants to always be in the marketplace. And there is a period of time between trades that you have to get real comfortable with. That period between not engaging, when the market delivers something that you've anticipated, like we just watch it unfold in the indices. We watch it unfold in euro dollar index. Okay. So I did things in Forex for the crowd that loves Forex and know me mostly from that. And I've stayed true to E-mini S&P. I said I was going to focus on E-mini S&P. But before we even started this whole parade, I told you NASDAQ was the one. And if you're trading NASDAQ, keep your focus up on that weekly gap inside that volume imbalance. And we gapped up into it today. Beautifully. I'm satisfied. Now, what does that mean? So that way you understand, you put it in your notes. That means I am literally neutral. I hold no bias right now. What do you mean you don't hold bias? Come on, ICT, you're holding back. No. I enjoy the period of time when I've expected the market to perform a specific way. I submitted myself to that whole time. I didn't arm wrestle it. I bask in it. I peacock around in front of my wife about all the time. Okay. You think I'm being funny? I am. I'm fucking really doing it because I want her to see what I do that she thinks is a video game. Like this is hard. It isn't a fucking video game. This is something that takes a lot of skill, a lot of attention, a lot of effort, focus, and you're wrestling with yourself. And on social media, I have all kinds of assholes constantly coming over here trying to promote some idea that would be opposing to whatever I'm saying, hoping that they're right. And most of them are falling on their face. And I just let them talk. I'll mute them, but you don't ever hear from them again. They stop talking their shit. And I go check and see what they're doing. And they block me. But I do this to rub my wife. I'm like, hey, look, I said this is what's going to happen, and this is what it is. And she's like unimpressed because she thinks it's fucking PlayStation, like it's some kind of Xbox fucking game. So when you learn how to do this and you get your victories, learn to bask in them. That's not ego. You're going to need those moments to lean on when you go into periods of drawdown. You got to be able to remind yourself, man, it felt really good to get this right, to do everything in the analysis as I was taught, and it performed exactly as I was expecting. This feels good. You need to set up a tent and live there for a little while. Not just say, okay, next trade. That's where you get your ass handed to you. Listen, folks, listen real fucking close. Because this is the truth. Every single time I blew an account came immediately on the heels of something like we just experienced, where I did something right. It performed the way I was expecting. It went to target, and that sugar high wore off, and they wear off fucking quick. You think you're like, oh, you call 1,000-point move, does this, does that, does this, all these wonderful feelings. You get the butterflies, you share it with your friends, you show your coworker, you show your boss, this is what I made. So that way he knows that your fucking pittance of a money paycheck that you give me is nothing to me. It's literally fucking less than one handle on the S&P for me. Go fuck yourself. That wears off fast. That wears off real fast. So what do you want to do? You want to get another hit. You want to get another drag on that joint we call the market. Smoking's bad for you. Don't do that. Smoke the markets. It's healthier. So don't rush. Don't rush to get back in there and do something right away, because what you're feeling is withdrawal. You're all hopped up on fucking goofballs. You did something right, which is great. Champion that. But live there for a little while. Take a week off. You just did something amazing, what most people fail at. You adhered to one rule, which is stick to the model. Don't get caught up with the media. The media was saying, oh, the market's going to crash. Mm-mm. I would like to see it happen. I would like to see us default. It would be painful as shit. It would be a wreck, carnage every fucking where. But that's exactly what should take place. In a real free market, that's what should be happening, and it's not. So you got to keep taking your buy signals. If the market's saying, I'm not going down, and the best pain threshold will be met by going higher. Now, here's narrative. This is where we transition from just market macro perspective talking in generalized commentary to now specifics, where we have a seasonal tendency that even the general populace knows that, you know, if you're a trader in stocks, usually it's the sell in May and go away. I would like to see that form. But what is the chart telling me? There's a weekly volume imbalance. Everything I've taken you to into the charts, because the charts tell the story. Fuck the media. Fuck all the reports. I don't even know what those data points say. Like when CPI comes out, I couldn't tell you to save my own ass what any of that information was or what the data was. I could never tell you. I don't care. I don't care to know because it's all bullshit. It's all fake. It's all manipulation. They use that as a way, like a magician. Okay, if I was standing in front of you, I'm pretty good sleight of hand. I could take something, place it in this hand, and you'd swear up and down that I placed it here, and it would be in my other hand. And while you're looking at that hand, I'm dropping it in my pocket or switching it with something else. And then the reveal would be like, how did you just do that? Well, that misdirection, that's what these reports are, folks. So if you've never really got the gist of why I talk about the economic calendar, it's not because I'm a fundamental trader, because fundamentally I think it's flawed to think about it fundamentally. I'm a technically minded trader. I believe that the charts are telling you in advance how they're going to hurt the people that believe the bullshit. So if you're a person that likes to trade with fundamentals, that will wreck your ass on these intraday charts because they're going to do something. And the easiest thing to do is to study, go over to Forex Factory. Okay. Go to Forex Factory and click on any one of the news drivers that are high impact or medium impact. Okay. And when you do that, click on the information that tells you how to determine what it means. If this report comes out and if the number's higher, it's good for the currency, or it's good for, whatever, or it's not good for it. It's negative. You expect it to be lower in prices because of it. How many times does it do that? It's 50-50. Don't take my word for it. Go back through the data and see it for yourselves. So if it's 50-50, what fucking use is it to anyone to even worry about what it is? So you got to look at the technicals, and you got to ask yourself this question, which is what I teach. Who can be hurt the easiest? Where's the shortest line to pain where profit can be made? When I look at charts, I'm looking at victims. That's what I see. Okay. I see stop loss orders that are easy to take. I see inefficiencies that needs to be revisited to and still keep the context or narrative underway that's in price action that normal retail traders would not expect it to be because they're looking at charts with patterns, or they're doing things harmonically. They're looking for Fibonacci ratios to only match up to this point. You're looking at animal patterns and all these other things that they're believing in as a religion. And all of those things I factor in. Yes, I understand harmonic trading. Yes, I understand all that other bullshit, Elliott wave. I understand all that stuff. And when I look at charts, I can see how they're wrong. And when smart money will roll on them. So without needing to teach you all the bullshit, Elliott wave, supply and demand, harmonic patterns, all that dumb shit, I take you right to the narrative, that PD array matrix. It saves me so much time not going through the shit that's going to bog you down. Because I'm getting right to the point. You don't realize I've gotten to the point. Every time I talk to you, it's right to the point. But the problem is where I take you, it's uncomfortable. You want it to be easy. You want it to be right now, real quick understanding. And it's not like that. But the people that put the work behind it, and they say, okay, I'm looking for one model. I'm looking for this type of trade. And I'm going to simplify it by only looking for this thing right here. What is that? Could be the breaker. Could be the model in 2022. Could be that's it. It could be the silver bullet, which now is removed the whole idea. When does it form? When do you look for it in this? It's offered to you in London session. It's offered to you in the New York session in the morning. And it's offered to you in the afternoon and in the New York afternoon. There's 3 fucking opportunities per day. What are you doing with it? What are you doing? Have you gone back through your own charts and studied it the same way I've been teaching it to you? Remember, if the fair value gap forms, or if it doesn't form rather, on the 5-minute chart, you drop down to the 4-minute chart. If it's not on the 4-minute chart, you drop down to the 3-minute chart. If it's not on the 3-minute, you drop down to the 2. If it's not there on the 2, you drop down to the 1. If it's not there on the 1, you drop down to a 30-second or 15-second. Whether you trade it or not, you study it because you're teaching your mind, your brain. Here's what you're not realizing. When you're looking at price, you're not telling yourself, okay, this is a 60-minute chart and it only works on a 6-minute chart. Your brain's looking at these candlesticks and you're running through this rush of emotions. It's going up, it's going down. You want it to go down. But every time it goes up, you're thinking, it's probably going to fail. It's probably going to be a losing trade. I got this stupid fucking demo trade on. It's going to be a fucking loser. I'm wasting my time with this shit. You're not doing it right. You might be doing a lot of that and saying, I've been studying a lot. Fuck you, ICT. I've not been putting enough time in. I'm tired of hearing that. I'm tired of you pissing and moaning. How about that? How about that? I'm tired of listening to the same couple people bitching about how they don't like being told they're not working the right way. You got to work the right way. You got to follow the fucking rules. If you don't want to follow the rules, of course you're not going to get the results. Of course you're not. You can join a gym. If you never take your fucking ass there, you're never going to get fit. Just because you show up and listen to me talk, you're not lifting the fucking weights. You're not pushing. You're not putting the effort in. You're not doing the repetitions to the degree of failure. Muscle growth comes by failure. You got to take that point where you can't do it anymore. When it's failure, then you've caused damage. The muscle says, okay, fuck this. I got to get stronger. Build more muscle. Well, your brain is the muscle with this. You have to build it up. That means you have to go through that really boring shit. You got to listen to lectures like this, where it sounds like I'm chewing your ass out, and I don't want you to succeed. When I do want you to succeed, it's your perspective. If you want to come into this as a victim, you're going to see everything, and you're a victim to it. The way I teach, you're victimizing the unlearned. You're victimizing the neophyte. They don't know how to fucking trade. They put their stop loss in the wrong place. We're running on them. We're not running in a pack like a wild animals, okay, trying to find whatever moves next. That's reacting to price. Fuck that. We are a cheetah. We know we can run any fucking thing down. We can run anything down. Put whatever fuck you want to put in front of us, whatever method out there, we will run circles around that shit. Nothing can fucking beat what I'm telling you. I'm nothing can beat this. Nothing. If it could, it would have came. It's never come. You are a cheetah stalking in the high grass. And there's a herd out there. They think they're safe because they're close. They're all doing the same thing, eating the grass. They're hanging around, the same people, doing the same shit. Harmonic, retail, Elliott wave shit. You're the cheetah. You're sitting out there in the long grass. You're just waiting. You're just waiting and waiting and waiting. And you see that one gazelle just takes a step too far out and puts his stop loss right there, easy for the taking. The herd is going to move away. But that one animal that doesn't know what it's doing, it doesn't shift when it should. And now there's a fair value gap. And 72 miles an hour in seconds. Your ass is there pouncing on it. That's what I'm envisioning in price. Do I know that person that's losing money? No. Do I know the person that has all their hopes and expectations of making money on that trade? Do I know them? Am I going to see them? No. Am I worried about them? No. Do I feel bad that they lost money? No. I have to eat. You have to eat. Everybody signs the same risk disclosures when you come into this market. Everybody understands that you can lose and lose more than you have. I have no qualms about it. Period. It's the way it is. It's a jungle out here. You either are prey or you're a predator. I don't walk around or teach my students to be a lamb. This is the way it is, folks. You have to have teeth and you have to have claws, and you need to know when to use them and how to use them. You want to come in here and play the nice guy role, and everybody, is going to love you, and you never say anything wrong or never off color or whatever. Bottom line is, that's not what this is. This is fucking war. We're talking about money, real money, lots of it, and major entities out there that do not want you to be doing this successfully. They're going to roll on that. And I'm teaching you how to beat the fuck out of that. Okay? Consistently. To be able to just constantly walk in there every single week. You go to work. Do you have to learn your job every new week that you go there? Do you have to relearn your job? No. You know what you're doing. You're fucking bored. You can't stand being there. It's the same thing for trading. You need to get your trading to be just like that. And for the folks that are struggling, you can see the draw. I'm going to play devil's advocate for a moment.